everyone. It's 11:30 on your clock. It's time for the first edition of Market Fatafat right here on ET Now. I'm Karunya Rao, and joining me on the show today are from the research desk, there's Soumya Sharma, Varun Hiremath, and also joining us from the technical side is Hemen Kapadia. Good morning, everybody, and thank you so much for coming on board. Let's get started with a 30-minute comprehensive show, keeping in view all the important stocks and trends you need to be watching out for in today's trading session. First up, we'll talk about the auto stocks. This morning, we had the remaining three numbers also come in. There was TVS Motors, Bajaj Auto, as well as Ashok Leyland. Barring Ashok Leyland, I think Bajaj and TVS were bang in line with the estimates of ET Now's poll. As far as Ashok Leyland is concerned, well, that was tad bit upsetting, tad bit disappointing as far as our poll was concerned, because we were expecting a bit of an uptick on a sequential basis come by as far as Ashok Leyland is concerned, but that has clearly not happened. The stock trading completely flat in trade. M&M, Maruti, Escorts, Tata Motors, these are some stocks which came, the big ones, the important ones which came out over the weekend. All automakers have reported strong double-digit cuts on a YOY basis. So extremely dismal set of numbers. Analysts say the worst is still to come. OEM say they are hopeful of a pickup as far as the festive season is concerned, because that will be kick-starting September onwards. So let's see, because September could be a game changer this way or that as far as auto pack is concerned. So right now we are witnessing at sales almost halving on a year-on-year basis. Let's move right on and listen into what the Escorts management had to say, because even after a dismal numbers in August, Bharat Madan of Escorts, he hopes for a reversal in trend coming September. Like I just said, OEMs are still very hopeful, are keeping their fingers crossed. He also expects the festive season to boost growth for rural markets, especially. Listen here.
Month of September will actually reverse the trend. So unlike what you've seen in the first 5 months where we're seeing double-digit degrowth, only September will be the first month where you'll see some reversal happening to the trend. So overall for Q2, which we earlier guided, probably the degrowth will slow down to a level of about 3 to 5% compared to 15% degrowth we've seen happening so far in the first 5 months. So we're very hopeful, I think, for the season, September to November. So really, tractor play should be really doing well now with the rural market reviving, with monsoon happening to be in a good level, which it hasn't made up. So we expect next two crop seasons should actually do well. Well, I think the next 3 months are very crucial. With the entire festive season, September to November months will be crucial to decide the fate of the whole year, how the industry grows. So we'll rather wait for the season to be over. But we are assuming, again, if you look at the last 5 months of retail trend, retail has not really been that bad. Retail has been actually degrown only by a single digit, about 8% in our case. So it was only basically a bit of correction which happened in the channel inventory level, which really led to some double-digit degrowth.
Well, that's Escorts management for you. The stock is down 2.5%. This is the fifth consecutive month of double-digit degrowth for Escorts, and perhaps that's why the street is giving the stock a thumbs down right now. Another stock from the auto pack that we're watching out for is TVS Motors. The numbers were largely in line. The stock is also doing fairly well, up 2.5%. Hemen, what's your verdict on TVS?
A very good morning to you, Karunya. I think it will be a hold. I think the market itself is supposed to bounce, and TVS Motors to hold with a stop loss of 345, target of 375. Threshold downside appears to be limited. The daily and the RD2, RD3, RD mechanical indicators are turning positive, giving crossover buys, increasing the possibility of a bounce.
It's a hold with a stop loss of 345. Keeping it with autos, Varun, I should also deliver their numbers. How did Royal Enfield do this time around?
Yeah, Karunya, Royal Enfield numbers came in kind of disappointing. We saw volumes correct by around 24% on a YOY basis. And even for VECV sales coming in at around 3,500 units versus 6,000 units, we saw that down around 41.7%. So as of now, there's no commentary really offered by the management. But all in all, they came in below street estimates.
Absolutely. Eicher Motors right now is, dealing with deep cuts, 2.5% lower for that one. Moving right on to financial space, Soumya, India Bulls Housing Finance is in focus. Tell us what's ICRA saying.
Well, ICRA has downgraded the credit rating of the long-term rating of the company by 1 notch to AA positive. Well, this is on back of growing concerns when it comes to India Bulls Housing Finance. In fact, they say that the rating is under watch with developing implications in light of its merger with the Lakshmi Vilas Bank. So as of now, talking about the stock performance, it's off from today's low, but still trading in red and is losing close to about 1%.
Right. Talking about mergers then, on Friday, of course, all of us heard what the FM had announced with respect to PSU banks. A whole host of them merging into one another. And one of these stocks, Indian Bank, is reacting very, very sharply, very, very negatively to it, because the merger with Indian Bank is going to be that of Allahabad Bank. And if you look at it, the NPAs have exceeded its net worth. The government will infuse the lowest amount when it comes to the recap plans as well. 2,500 crores is what has been announced. So Indian Bank could actually be worst hit, because this is one bank which has really worked towards improving its asset quality, and a merger with Allahabad Bank could actually prove to be quite detrimental. At least that's what the street is expecting at this point in time. Nilesh Shah from Kotak also says that bank's merger is a step in the right direction, and he sees fundamentals changing for the banking sector going forward. So let's bring on board his perspective as well.
Merger is a step in the right direction, but it is not the final destination. We must empower public sector organizations to take administrative decisions without external influence. We must ensure that the top management of PSUs are compensated in line with the market salaries. If we can give them administrative freedom with this incredible talent and assets, I am sure PSUs will create a miracle. Unless you attract right talent by giving appropriate compensation, unless you give that talent appropriate freedom to work, these models are unlikely to succeed.
Okay, contrary to how the stocks are reacting and responding to the PSU banking merger, Nilesh Shah seems to be quite optimistic about the future prospects of at least most of these PSU banks. Moving on to HDFC. Hey, Main, it's another stock that's looking quite weak today. But overall, what is your view on this counter?
We've been down for 4 trading sessions, Varanya. I would say a hold, the stop loss of 2085. It's been in a corrective bounce, notwithstanding this 4-day decline. But in the overall scheme of things, the daily MACD is in buy. The bigger bounce is not yet over. So, notwithstanding the small weakness, I think there is some upside left, and we are going to move up towards 21.9. That would be a hold.
All right, let's keep it with the banking and financial space. Bank of Baroda is another PSB that we're tracking. Varun, what's the update?
Bank of Baroda was allotted 7,000 crores post the FM announcement. They were in any case amidst their own fundraising plans to raise around 2,100 crores. This was to be done via ESOPs and another instrument. This money has been used recently to acquire NBFC portfolios, and the capital adequacy stands at, a decent 8.5%. So what's interesting about Bob is also that it's a bank that went through a merger process a year ago. So these synergies we hear of with the new PSBs should be translating now into, a better P&L. So we should be watching out closely to see the cost-saving synergies there.
Okay, at this point of time, of course, the stock is looking muted, but yes, future synergy is definitely something to watch out for Bank of Baroda. Next up is stock number 8, Soumya, Tata Steel. What's the update there?
Well, this one's under pressure given the fact that companies are shutting some of its operations in United Kingdom, which may also result in job losses of around 400. And apart from this, the Tata Steel Europe has sold Cogent Power to Japan's JFE Shoji Trade Corporation. Well, this is all keeping in mind the fact that they're monetizing their non-core businesses, and in fact, they say that they see very bleak possibilities of these units coming back to profitability, and as a result, they're going for monetization of these businesses. The stock's definitely losing in trade today, down by over 2.7%.
Yep. But on the flip side, there's a Yes Bank, which seems to be doing fairly well, contrary to many of the banking and financial names in trade today. It's up almost 3% as we speak. The update or the news there is also not very good. India Ratings, in fact, has downgraded the long-term rating to A+ from AA. Their outlook continues to be negative. There's been inadequate progress on the pace of resolution on certain assets when it comes to Yes Bank, which it has exposures to. So that is something that seems to be a big overhang according to India Ratings. They also say that there's lower than expected quantum of fund raised even after consideration of the recent QIP worth 1,930 crore rupees. So while India Rating seems to have given it a thumbs down, the street at large seems to be quite buoyant, quite optimistic about Yes Bank, at least in today's trading session. It's trading above 60 bucks, up nearly 2% in trade. Hey, Main, let's move right on to you. ACC Cements, the stock on your radar. What's your call?
Well, it looks like a sell-on bounce. if I look at the monthly charts, weekly charts, daily charts, it remains in a short, medium, and possibly a longer term downtrend. So it's just that, yeah, like I said, I feel the market could bounce, so it could be a sell on bounce.
All right, that's the word coming in on ACC. Time for a quick break, but before we do that, let's quickly pull up the Rise with India small case index as well to see the levels it's perched at today's market session. 521 with a loss of nearly 1%. Not too bad because, you know, the way the markets are reacting, our RWS small case index has definitely been able to hold on its own. So not bad, 521 odd rupees. It was launched nearly a month back at 500 levels. Right now, definitely trading with a loss of 1%. Let's slip into a short break. We have plenty more stocks lined up on the other side. Be back soon. Welcome back. You're still watching Market Fatafat on ET Now. Let's get on board with stock number 11. Varun, Canara Bank, another one to be merged with a couple of more entities.
Yeah, Karanya. So Canara Bank doesn't seem to be reacting too well to the merger news. Now its partner Syndicate Bank, however, is flat. So, you know, the one guess I could make is maybe people aren't too happy with the merger. They think the synergies in this case might not pan out as planned. Maybe there's an overlap in the loan book or in the geography. I'm sure we learn more as we examine both banks closer. We'll be watching to see what happens with them in the coming weeks.
That's right. Canara Bank definitely taking it on the chin today, 7.5% lower. JK Tyre, another stock that we're keeping on our radar today. That one is looking very resilient. Soumya, what's the update?
Well, yes, this one's definitely buzzing today after JK Tyre promoters have prepaid KKR loans. Well, this was done in two tranches, one of 50 crore and the other was 150 odd crore rupees. And with this, they've regained the control of the total pledged shares as of now. And this entire incident has definitely acted as and has helped revive the investor confidence when it comes to JK Tyre. And we're seeing this sharp reaction coming in where the stock's gaining smartly by over 5%.
Right, JNK very, reacting very, very positively to that development, up almost 5.5%. Another two names from the oil and gas space that we're tracking are BPCL as well as IOC. Both of these stocks are in focus. BPCL is down 2.4% as we speak. The government is mulling selling its entire stake in BPCL to IOC. So that's a huge news, a huge development as and when it happens. But even the news of it has really had a massive reaction on the stock prices. IOC is also bleeding in trade. The government may actually pocket 40,000 crore rupees by this kind of transaction. So let's see how the synergies play out. What will be the contours? What is it exactly that the government will finally, decide on doing? But right now, both of them are reacting quite negatively, quite sharply to it. BPCL also spoke to us earlier on in the day. Let's listen in.
I think so, given the fact that now the MS cracks are also, slightly looking up. Last year, if you have seen, it was somewhere around, $6 per barrel. But we are expecting that it will be, it'll be improving. This year we are looking at MS, touching something like, $7. And as far as HSD is concerned, it has been relatively at a fairly steady number. Something like, $15 and all that. So, this quarter, it has gone up to 16. So we're hoping that it will go up in the coming days.
So we're also looking at the bond yields in our system come down and borrowing costs in general edging lower. OMCs have, a large section of their overall capital from the form of borrowing. Is cost of capital coming down helping your financials in what manner?
Last year, if you have seen, our financing costs had gone up. That is basically because of, two aspects. One was the borrowing cost was going up, on the higher side. And also the quantum of borrowing, basically to take care of our working capital, it was going up. So, this is what the trend is. But all said and done, it is necessary that even if you look at the balance sheet of BPCL, so we are talking about a debt equity of something like 0.79:1. So there is a leverage that is available. So going forward, we will end up doing this, taking care of. We will end up using this leverage that is available to us.
So how are you planning to, one, counter the EV trend which is taking over the country right now, and partner with it or integrate that in your business model in the next 2-3 years?
So I did mention that as far as EV is concerned, so we are very much moving on the learning curve. We are there in the battery charging space, and we are there in battery recycling, and we are there in battery swapping, and we are there in we are looking at battery management also as a solution. So we are working on all these in 4 aspects. So we'll be moving up on the learning curve. So when it is really happening, currently it is in the initial stages of evolution, as far as the country is concerned, in the EV space. So, as it moves further, then with the learnings that we would have, had by then, so we should be able to launch into that particular space also.
So we saw a specific mention on petrochemicals from your side this time round, which we have not seen so much in the last couple of AGMs. Next 3 to 5 years, what contribution of your overall profitability do you see coming from petrochemicals?
So I did mention that in today's scenario, the percentage of petrochemical in our portfolio is about only 1%. This is keeping in mind the aspect that we were maximizing on the transportation fuel. So going forward, with the refineries coming up and with some kind of an impact on let us say the transportation fuels going forward because of new things coming up, EVs coming up, and then let us say renewable energies like picking up, energy picking up. So keeping these things in mind, it will be a good proposition for us to even diversify.
Okay, continuing with Market Fatafat, moving back once again to a banking name. It's ICICI Bank this time. Hemin, why are you recommending a sell?
Well, if I look at the short and medium term charts, it looks in a lower top, lower bottom scenario. The outlook remains negative, and the mechanical indicators are also in a crossover sell on the daily as well as the weekly chart. So, but once again, I'd like to reiterate, Karunya, it's a sell, not a short, because I still feel we have a move as far as the Nifty is concerned to 11,200. So it's a sell, but not a short.
All right, thanks for clarifying that. ICICI Bank looks, meanwhile, quite weak in trade, down 3%. Varun, Ashok Leyland's numbers are also out this morning. How bad were they?
Well, dismal numbers as far as Ashok Leyland is concerned. Total vehicle sales declined around 50% YOY, and MNHCV sales declined around 63% YOY. So there's likely to be a high level of inventory still left in the channels, although we haven't got an official statement from the company. And this, just flags off the weakened domestic demand that we've been seeing across various sectors right now with the general slowdown.
Right. Ashok Leyland, however, looks not too perturbed by the dismal set of numbers, at least on the stock price. Perhaps the market was factoring in that once again the company will end up delivering a weak set of numbers. Meanwhile, KNR Constructions is looking quite good in trade. Soumya, what's the development that's taking the stock higher?
Well, this one's buzzing on back of order wins. They've received order worth over 850 crore rupees from Megha Engineering and Infrastructure, and this entire order inflow is expected to give strong revenue visibility as we go on and move on to the next quarter as well. The stock's definitely reacting to this order inflows and the fact that company is good, keeping good when it comes to their financials.
All right, that's KNR Construction up 2.5%. PNB, another public sector lender that's in focus once again on back of the announcement made by the FM on Friday. The stock is bleeding, down 8%. They will be merging with OBC and United Bank of India. It's the second largest public sector lender that the government aims to create with this mega merger, with a business of nearly 18 lakh crore rupees, which is 1.5x of what PNB has right now. PNB is mulling up to 18,000 crore worth of capital infusion next week, actually later this week itself. This is something we're picking up from agencies. That's another development to track going forward, but right now the stock clearly is reacting to what the FM had said, and perhaps the street is not liking it much. Hemin, Axis Bank, another private sector lender that you're tracking, what's the call here?
I have a hold as far as Axis Bank is concerned. Karunya. We've not closed below 642 despite multiple attempts in the last 3 weeks. Stock is oversold. There is some sort of positive divergence coming in. And as long as the 640 level holds, chances are we are going to see a corrective bounce coming into 680. So hold with a stop loss of 640.
With a stop loss of 640 rupees on Axis Bank. Stock number 19 then, another giant from the cement space, Ultratech Cement. Varun, what's the update?
So the cement pack continues to slide. We saw ACC as well having a tough day in trade earlier. Weak demand and outlook for construction and infra sectors given the current situation economically. And, specifically in the southern region where performance for these companies is focused, volumes have been considerably lower than last year.
Okay, and on back of that, clearly cement players are reacting. Ultratech being one of the front runners of that space is also reacting quite sharply to it. The stock is down 3.5%. Last stock for the day, stock number 20, ONGC. Soumya, why is it in focus?
Well, unfortunately, there was a massive fire in ONGC gas plant in Uran, and in fact, what we gathered was there were fire brigades that were rushed to the spot, and several workers feared to be injured or have lost their life. We even tried getting to the management and ONGC, and the company said that the fire at Uran has been contained and assessment of the damages is still being done, but the production at Uran is not affected, and as a precaution, gas production has been shifted to Hazira. But at this point of time, what we're learning is that there might be some damages as far as the lives are concerned. The stock's definitely trading in red and is down by over 1.9%.
All right, that's the update coming in on ONGC, which is keeping the stock in focus. It's down almost 2%. With that, we've completely run out of on our time on Market Fatafat. Thank you so much, Hemeen, for joining us. Varun, Soumya as well for your insights and updates. With that, we're going to wrap it up. Thank you for watching.